Have you ever wondered if you could send money directly to anyone, anywhere without a bank? This is the core idea behind cryptocurrency, a new form of digital money built for the internet age. Many people find it confusing, full of strange words and complex ideas, but at its heart, it's quite simple. This guide will explain it all in a few minutes, using plain language and everyday examples. No complicated jargon. We'll explore what this technology is, how it works, what it might mean for you. Imagine having complete control over your funds, sending money across borders as easily as a text. No one can block your transaction or freeze your account without cause. This is the future enthusiasts imagine. Not just a new way to pay, but a different way of thinking about ownership and trust. We'll walk through the fundamental building blocks step by step, so you understand the basics before forming an opinion or acting. A calm, neutral exploration. We won't tell you to buy anything. Cryptocurrency is digital money. That is the simplest definition. You can use it to send value to someone else online, and you do not need permission from a bank or a payment company to do so. Think of it like the digital coins you might use in a video game to buy a new sword or a special power-up. You own those coins within the game. With cryptocurrency, however, these digital coins exist on the internet itself, and you can use them to buy real-world goods, buy real-world services, or send them to a friend who lives on the other side of the planet. Now, how is this different from the money you already use? When you use your credit card or a banking app, you are asking a financial institution to move money on your behalf. The bank checks your balance, approves the transaction, and updates its private records. A cryptocurrency transaction works differently. It is a peer-to-peer system, meaning the transfer happens directly between the sender and the receiver. The system that checks and records this transaction is not a single company. It is a global network of computers working together. This makes it more open and often faster for international transfers. Let's use another simple analogy. Physical cash is something you can hold in your hand and give to someone directly. No one needs to approve the exchange between you and a shopkeeper when you buy a coffee. The core technology that makes most cryptocurrencies work is called a blockchain. To understand it, imagine a special notebook that is shared among thousands of people. This notebook is public, so anyone can look at its pages. Every time someone sends or receives cryptocurrency, a new line is written in this notebook to record the transaction. For instance, it might say, "Alice sent 1 coin to Bob." This public notebook acts as a master ledger, keeping a permanent and transparent record of every single transaction that has ever occurred. This notebook is not made of paper, of course. It is a digital file, and the lines of transactions are not just added one by one. Instead, they are bundled together into groups called blocks. Think of a block as a single page in our shared notebook. Once a page is filled with transaction records, it is ready to be added to the notebook. Before it gets added, however, it must be checked and verified by many of the people who share the notebook. They all work together to confirm that every transaction on the page is legitimate and follows the rules. Once enough people in the network agree that the new block of transactions is valid, it is officially added to the end of the chain of previous blocks. It is sealed with a special digital lock that connects it permanently to the block that came before it. This is why it is called a blockchain. It is a continuous chain of blocks, all linked together in chronological order. This linking process is crucial. It makes the notebook incredibly secure. If someone wanted to go back and secretly change a transaction on an old page, they would break the chain. Because the notebook is shared and constantly checked by so many independent computers, it is extremely difficult for any single person to cheat. To alter a past transaction, a hacker would need to overpower more than half of the computers in the entire global network, all at the same time. This would require an immense amount of computing power and expense, making the blockchain a highly secure and trustworthy record-keeping system. This shared public and secure ledger is the revolutionary innovation that allows cryptocurrency to exist without a central authority like a bank. Engaging with cryptocurrency can be an exciting journey, but it is important to see it as a roller coaster with thrilling highs and stomach-churning drops. One of the biggest rewards is the potential for financial gain. Prices can increase dramatically in a short period. Early investors have sometimes seen life-changing returns. Beyond price, crypto offers practical rewards. Fast, low-cost international payments. Bypass slow, expensive traditional banking. Protect savings from inflation in unstable economies. The technology opens the door to new applications. Just as the internet gave us email, social media, blockchain is the foundation for financial services, decentralized organizations, digital art, online gaming economies. This innovation is a powerful reward, creating opportunities for developers, entrepreneurs, users. Participate in a global, open financial system and have more control over your own assets. It promises a more inclusive, efficient digital economy. But every reward has a risk. The most obvious is price volatility. The same forces that drive prices up can make them crash. Crypto values can drop by 20%, 50%, or even more, very fast. Invest only what you can afford to lose. The market is driven by speculation and sentiment, leading to extreme, unpredictable swings, not for the faint of heart. Other serious risks exist. Crypto is a target for hackers. If an exchange is compromised or your security is weak, your funds can be stolen. With no central authority, there is often no way to get them back. Scams are widespread. Fake projects, fraudulent offers. If you have weighed the risks and rewards and are still curious, it is best to approach the crypto world as a cautious student. Your first and most important step is to learn. Before you even think about buying anything, spend some time reading basic guides from reputable sources. Watch videos from trusted educators who focus on explaining concepts rather than promising you quick riches. Understanding the fundamentals of how a specific cryptocurrency works, what its purpose is, will protect you far more than any other single action. Knowledge is your best defense against making emotional decisions or falling for scams. When you do feel ready to get some hands-on experience, the key is to start small. Very small. Only use an amount of money that you would be completely comfortable losing, as if you were spending it on a concert ticket or a nice dinner out. The goal of your first purchase is not to make a profit, it is to learn the process. Experience what it feels like to set up an account on a trusted exchange, make a purchase, and see the asset in your account. This small, low-risk action will teach you more than hours of passive reading. Next, you must prioritize security above all else. When you buy crypto on an exchange, you will be encouraged to set up strong security measures. Always use a unique, complex password, and more importantly, enable two-factor authentication. This feature adds a second layer of security by requiring a code from your phone in addition to your password. For storing crypto long-term, many people use special wallets. Software wallets are apps on your phone or computer, while hardware wallets are small physical devices that keep your funds offline and are considered one of the safest options. Finally, cultivate a healthy sense of skepticism. The crypto space is full of noise, and it can be hard to tell who to trust. Be extremely wary of unsolicited emails, social media messages, or celebrity endorsements promising guaranteed returns or free crypto giveaways. Always double-check website links to ensure you are on the official site and not a convincing fake.